Traders, I'm resuming the video because I just took a failed second entry short because the uptrend needs to get new extreme following the trendline rule. Downtrend played out, the broad two-legged pullback. I ended on engulfing bar because the single bar was so big you tick lower. All the sellers selling second entry short right into the EMA, into the trend line, they got trapped. And this is a nice bullish bar, failed second entry short. Uptrend needs new high. Here I'm going to show you the visual two-legged pullback. Market likes to move in pairs of two, so you have first entry short, second entry short failure. The better it looks for the opposite side, the more you can count on this being a trap. And the sellers sold second entry short right into the EMA while the downtrend played out, and we traded up into this market structure. We pushed above EMA, which confirmed the bullish bias, and I'm following the trend line rule. I need to get new extreme. So this is where everything in price action aligns. I'm scalping 7 contracts for 2 points and leaving 1 contract as a runner in case market is going to rocket higher. My stop loss has to go always 1 tick below the single bar. Engulfing entry is a little bit more advanced setup, but when you can see the tick lower, instant reversal up, this is indicating they got trapped. And on failures, the engulfing is tolerable. So I'm taking a little bit more risk, but it triggered anyway, so hopefully we're gonna get the scalp here. We're bouncing on my next order, but we need to tick through. Alright, traders, so our scalp just got reached, we ticked through, and now I'm gonna place my stop loss to break even because anything we're gonna make right now is going to be just a bonus. The scalp is the main portion, so hopefully it makes sense how we capitalize on the weak sellers. You can see broad two-legged pullback, market moves in pairs of twos. Failed second attempt because the sellers, they got trapped. We're above EMA, uptrend is new high, and we're about to reach it. So I'm tightening my runner like this because we have a break new extreme. So there's a big chance we're going to reverse after reaching new high, simply because if I'm going to zoom back, this is a pure train range structure. Up and down, we're drawing channels tight. So this is textbook price action rules aligned. And we're going to get 2 3/4 points if we're going to get our stop hit, and we're going to have 4 points on our runner if the runner is going to be hit here. And we made our 4 points here. New high was reached.